Good morning, friends. Welcome to SBI Securities Morning Podcast. In today's podcast, we'll be discussing what to expect in Nifty and Bank Nifty from here on, along with the key levels for both the indices. We'll also be discussing on the key sectors and stocks that we should be focusing for the day and the next few trading sessions. In the global markets in trade yesterday, despite a choppy trading session, the S&P 500 and the tech-heavy Nasdaq managed to close at new record closing highs. The Dow edged up 66 points or 0.2% for the day. S&P 500 is likely to continue its northward journey and test the levels of 5,400 followed by 5,480 in the short term. Brent crude is trading in a narrow range of 81.50 84.3 since the last 13 trading sessions. Any sustainable move in either direction will lead to a trending move in the short term. The dollar index, if we see, that is DXY, is also trading in a narrow range of 104.40 104.8 since the last 4 trading sessions. However, currently it is trading below its 20 and 50-day EMA levels. Coming to Nifty, so in trade yesterday, the benchmark index opened at 22,450 and subsequently experienced a follow-up rally up to 22,590. Despite this surge, it was unable to surpass the 22,600 mark, leading to some profit booking in the final hour of trade. Despite a flat closing in the past 4 trading sessions, the index has comfortably traded above its 20-day EMA, indicating a bullish trend. The momentum indicators and oscillators are also reinforcing the overall bullish chart structure. On the derivative front, if we see, the May futures has gained by 0.28% yesterday, and the cumulative open interest of the current, next and far series has surged by 1.42, indicating marginal long built up in trade yesterday. Among the constituents of the Nifty index, that is the 50 stocks, so in trade yesterday we saw that 21 stocks have witnessed long built up, 8 stocks have witnessed a short covering rally, while 17 stocks have witnessed short built up and 4 stocks have witnessed long unwinding. If we look at the weekly series, the OI PCR data, that is, so currently it is at 1.10, while for the monthly series, PCR currently stands at 1.12, which implies a buy on dip strategy at the current juncture in Nifty. Looking at the open interest, so 22,600 strike has significant open interest followed by 22,700 strike, and on the put side, if we see, 22,500 has significant open interest followed by 20,400 strike. Talking about Nifty levels for the day, the zone of 22,590 22,610 will act as the immediate hurdle for the index. Any sustainable move above the levels of 22,610 will lead to a sharp upside rally towards 20,700 followed by 20,770 mark. On the downside, if we see, the 20-day EMA zone of 22,360 20,330 is likely to provide cushion in case of an immediate decline. Now coming to Bank Nifty, so Bank Nifty in trade yesterday marked a high of 48,259 and thereafter witnessed selling pressure. It has ended near 48,050 levels with a loss of 0.31%. On the daily scale, the index has formed a small body bullish candle with long upper shadow. The long upper shadow in the candle formation indicates selling pressure at higher levels. Most noteworthy, the index has slipped below its 20-day EMA level due to the consolidation. Since the last 3 trading sessions, the 20-day EMA has started losing its curvy nature. If we look at the derivative data for Bank Nifty, so the Bank Nifty in trade yesterday, May futures has dipped by 0.27% and the cumulative open interest has surged by nearly 1.34%. Looking at the OI data for Bank Nifty, so for today's expiry, that is, so 48,000 has significant call open interest followed by 48,200 strike. On the put side, if we see, 48,000 once again has significant open interest followed by 47,800 strike. The weekly series OI PCR is at 0.73, while for the May monthly series PCR currently is at 0.76. Considering the current chart structure, the index is likely to consolidate in the zone of 48,300 on the upside and 47,800 on the downside. Any sustainable breakout in either direction will lead to a trending move of 500 to 7 points in the short term. Now coming to the key indicators. So if you see on Tuesday, the volatility index India VIX has witnessed a sharp upside rally of over 6%. It has given its highest closing since September 22. On the daily scale, it has formed a sizable bullish candle. Going ahead, it is likely to continue its northward journey and test the levels of 23.20 followed by 24.50. Presently, within the Nifty index component, 62% stocks are trading above their 20 EMA level, making a significant increase from 28% on May 9th. This suggests a uptick in the buying interest, particularly in select stocks. Now coming to the key sectors. So if you see metal, Nifty CPSE, Nifty PSE are likely to continue its outperformance in the next couple of trading sessions, while Nifty PSU Bank has witnessed a rebound from the lower levels and surged above its 20-day EMA. Coming to the FI/DI data, so FI sold to the tune of 1,874 crores yesterday, while DI is bought to the tune of 3,548 crores. FI long short ratio for index futures is at 31.61 on a net basis. This as they bought about 34,490 index futures. On the stock futures front, FIs have bought to the tune of 22,711 contracts, while on the options front, FIs sold 96,780 call contracts and sold 93,857 put option contracts. So friends, that's all for today. Thank you for regularly listening to our podcast and wishing you all an energetic day ahead. Do tune in tomorrow for more market updates and insights. Thank you.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.